Hi there, this is Chris from MoneyHub, and this video looks at vehicle leasing. So we've got a very useful summary of what we cover. We look at the benefits, what you need to be aware of. Should I buy a vehicle outright, or should I finance it, or should I lease it? And then the process if you do want to lease a vehicle. We look at it. We look at one example just with regards to the costs of each option, and then we conclude. So just as a first thing to say here, this is focusing, this video and the guide looks at operating leases, not finance leases. That's because operating leases are pretty much your standard car lease where you take it for 3 years, you pay amount per month, make sure that you don't, go over the mileage limit or anything like that. Then you just return it after the, 36 months is up or whatever term you've agreed on. So generally, the cost if you are running a business, the cost of an operating lease is 100% tax deductible, and you don't need to worry about maintaining the vehicle. That is something that the leasing company takes responsibility for. And thirdly to that, you don't need to borrow to actually get one of these car leases. You can walk away just with an agreement. So of course you don't actually own the car, stash the vehicle. A lot of people use them for vans. But of course, so you have to keep paying for them, otherwise they will be taken off you. And they're a fixed monthly fee usually, so you know what you need to budget for. You need to pay, obviously petrol costs and things like that. But you don't need to worry about the high cost or sometimes the high cost of car financing or van financing. You do need to be aware that you will need to keep the vehicle in really good condition, so that you are not charged this refurbishment charge or anything kind of like a bond fee or something like that. If you drop it off after the lease period and they find issues with it that they need to remedy, so that really is quite an important thing, because that can be quite expensive. You are locked in for a fixed term, so that's really important to note, that this isn't something that you can change your mind on later. You are taking it for the term that you sign up for. Plus, you also get a fixed kilometer allowance. This is something which needs to be understood up front, because if you do find that the purpose for your vehicle lease changes, you could be using it in the city, but then you get clients or something out that requires you further driving, then you'll need to know if that is flexible to be able to change or renegotiate the contract. And as I sort of suggested, there are high termination fees should you want to let go of the lease before the term ends. And a lot of them also make you responsible for the tires. So whilst they said that they are going to cover the maintenance, tires are something which is a fallout with that in most cases with leasing. So be aware that you will need to factor in those costs as well. We've also got a short summary of finance leases. This is not something that we cover extensively throughout the guide, but there are benefits of a finance lease versus an operating lease for some businesses. And if you do need to know more, then this is a short summary which will help. You can claim back, the GST on the lease. You will be signing up for a fixed period, where at the end of making all the repayments, all the finance lease payments, you will actually own the car or own the vehicle. The issue is that you can experience the depreciation as you go. The monthly payments can work out to be cheaper than car finance, but you do need to compare. And there are some issues with the fact that the cost isn't 100% tax deductible. So that is very much worth noting. What are the benefits of vehicle leasing? They're very flexible. So what we say is that it's very much like renting a home or renting a property. You just pay the deposit, and then you agree on a term, and then you're just basically making a payment until the term runs out, and that does lower your risk as a car owner. You can choose between new and used cars, and you will be covered for repairs and maintenance, which gives you a lot of flexibility and freedom from dreaded costs being incurred. Of course, the tires are something else. Then you are going to get you are going to get a manufacturer's warranty if they are a new car as well. So this is something to consider, but at the same time, some people don't really understand what they're getting into, which is why we've clearly pointed out some issues with this. First thing is here, you'll never actually own the vehicle. That's really, really important to know that, just because you've got a lease, it doesn't mean that you have a right to ownership. You don't have a path to ownership. There's no, well, I've made three years of repayments, surely that has to go towards the actually buying the car. No, you're leasing it. It's just like when you pay rent on a property, or stay in a hotel, you're paying for a fixed period. And you'll also need to pay for comprehensive insurance, and that's on top of the monthly lease cost. So be aware of that, and you do need to be conscious of the fact that the car must be returned in a very high-end state. Be fine for a few marks, or fine for a few sort of wear and tear, but it does need to really be able to be resold in a very strong state. And so that's why there are fees if you bring it back and there are sort of defects, or it needs to be re-upgraded or fixed. The financial obligations, there are things like late fees or early return fees if you bring it back early and you want to cancel the lease. So be aware of those. That I think what most people get caught out in is the mileage. So it sounds a lot, say 80,000, 100,000 kilometers over 3 years. Most people would probably, 10 to 15,000 kilometers per year. But if you are driving it around a lot for work, then that is going to be more than, that might not be enough. So really don't go into a car lease without properly understanding what the mileage is and how that applies to you, because the fees can be quite high if you overdrive the car. So what type of vehicles can be leased? Really, you can sort of lease whatever kind of car you want, ute, vans, and most of the time it's for businesses that are doing this. So if you're a sole trader, you can do it because it's tax deductible. If you own a limited liability company or you work for one, then leases go quite common there as well. But you do need to understand that it needs to be tax effective for it to be quite a good deal, and this means that you're getting the costs, the monthly costs are deducted from your revenue, so that it does become it becomes a lot cheaper versus car financing, where you wouldn't be able to do that. You'd be paying and also tying up the money. Just generally, what should people do? Should they finance or lease? Finance being like the path to own the car. It really just depends on your personal situation for your business. Leasing's pretty good in the fact that you're just paying a fixed fee per month, and you don't have to worry about anything sort of going wrong with the car, so it's not going to be problematic for your cash flows. But at the same time, there is no ownership path there, so you just finish it and give it back. And whilst that is tax effective, you may find that you would have preferred to have something sort of owned at the end of the period, or at least contributed to. So this really comes down to what you can afford and what makes the most sense. That's not something that, of course, we can answer in this guide. We've just listed a whole bunch of considerations. With regards to the process of leasing a vehicle, so step one, and this is the same for any type of financial decision, work out what you can actually afford. These are being charged per month, so there's no sense in overstretching yourself or stretching yourself at all. Just be pragmatic about this. Make sure that you can pay what is going to be asked of you, and you have to pay it every single month. So it's not something that you can roll over or push back or kind of renegotiate. You've got to be able to afford it per month. Second to this, you can then search for leasing companies. We've listed some below this guide, so it's worth having a look there. We have no relationship with these ones. It's something that we've just listed based on our own research. Then know what the price and the obligations are. So this is very critical. There's something that you don't if there's something that's not clear or that you don't understand, please ask. That's really, really important. You've got to ask right before you sign, because otherwise once you sign, then you're on the hook. Now, of course, you don't have to sign. You can go through step 1 and 2 and 3 and just, make the inquiries, work out it's probably not for you. You don't really like the idea of it later on or something like that. And that's all fine for you to do. As soon as you sign, then you are liable. So just be very cautious before proceeding there. What you also have to do is look at the insurance. So, a full comparison really does help. And always go for the cheapest, but also the most comprehensive, if that makes sense. So kind of a balancing price with with cover. And then finally, you have to drive the car or drive the vehicle, which sounds kind of obvious, but that is that vehicle is now yours to drive for the term. So do with it what you will. Just make sure that you return it in a good state, and then at the end of the contract, you have to return it, and then there'll be a situation of, okay, how much mileage have you done? Is that below what we allocated or what you agreed to? So if it is less than what you agreed to, then that's fine. There's no penalties. But if you have driven it more, then you will be liable for something, whatever's in your lease agreement. Secondly, if there is some damage or some sort of cosmetic work needed, then you'll need to pay for that as part of the refurbishment. So that's above anything that's wear and tear. So this is very, very helpful to know, but please just go through the guide in detail, because there are things that I'm not summarizing, just to just make sure that you have full understanding of what's needed. We've done an example here with Brian the plumber. So he's driving a van at the moment, which is incurring lots of bills, and it's cost him jobs because things are broken down. And he knows that he drives between 50,000 and 70,000 Ks per year, but he doesn't have $30,000 to buy a new van, nor a used one. So what are the options here? So there are 4 options. You can buy a new van, you can also buy a used van, and that's going to be financed, so that costs a certain amount per month. Some of it tax deductible, some of it not, and then you have to look at the guarantee on the van there, and what you're actually liable for, or how much cover you'll get later on for mechanical issues. 2, he can look at the operating lease, and that just becomes a cost of doing business, so he can see that he can get something for about $300 a month. Of course, these are all examples. And this protects them from any kind of mechanical issues later on. And he does need to put down a deposit, but that is the nature of the operating lease. He can also do option 3, which is a financing lease, and that is where you put down an amount and then pay per month. There is an interest rate involved in that because you are financing to own it, and then you need to be able to keep making those repayments. If you don't make them at any time, then you will lose the vehicle, so that will be repossessed, which means it'll be then sold, and you may be able to get something back, but otherwise you won't. So that can be problematic, and lots of business owners have lost their means of transport when they haven't been able to repay their ongoing financing lease. The last option being, Brian can also keep the van, so that's something also to be aware of. But of course that is causing him issues right then. So what we see there is that operating leases can be cost effective, but at the same time you're only getting the car for as long as you want to pay for it. That is good for tax reasons, but there's no long-term sort of ownership goal, so you'll always be paying for a vehicle as you go along. So something to balance out as you look at your own situation. We've just done a quick conclusion there, and we do like leasing overall, and there are a number of tax benefits for leasing. You just have to be careful that that you're not overcommitting. At the same time that you have a good leasing company behind you that's going to not be tricky with you, and that the lease is suitable for your needs with regards to the with the mileage that you plan to use. So every business is different. That's really critical. So please make your decision very carefully, and just make sure that you ask lots of questions with anyone that you're dealing with regards to the leasing. We've listed, as I said, about 7 or 8 different leasing companies here. There are many more, so feel free to cast the net wide on searching on Google. Thank you very much. If you do have any questions, let us know. We have tried to make this guide as comprehensive as possible. At the same time, we continue to update it, but if you have any questions or any comments that you want to make, please leave them in the comments below. We've linked out to a few useful resources from MoneyHub and beyond. And thanks very much for watching.